Din 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 din. Stop, collaborate, and listen. Wayne is back with a brand new invention. Something grabbed a hold of me tightly, flowed like a hot bolt alien nightly. Will it ever stop? Yo, I don't know. Turn off the lights and I'll glow. To the extreme, I'm like a punk, like a vandal. Light up the stage like a chump with the candle. Dem some good lyrics right there. So, guten Morgen. It is the 13th of September. Apparently, that's a Tuesday in America. Brace! How low can you go? Yeah. So, that is an opportunity for us to get together and trade, like son of a guns. S&P 500 gapping down today off of the 4-hour 21, of course. That's why it's there. I guess with that in mind, let me remind you that trading stocks, stock index futures, options, futures, forwards, swaps, and spot off-exchange foreign currency transactions, they all face risk. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. I love trading. It's a really, really, really interesting gig. Yesterday, sat down right before the Tokyo Open. Hey, probably good time to hedge. Ciao! The thing tanks. I'm like, oh, thank you. You know, very, very interesting because it's the time of day. And it's just nice to be able to sit down and say, oh, yeah, well, Japanese are going to hedge. Boom! Hedge. Did you guys catch the breakouts yesterday on the yens? Occurred about, I guess, around the London close. We had the stock market tank yesterday, and they dropped down into, let's just get into technicals. As you can tell, I'm a little scattered today. We were like right in here on these yen pairs. Right? Reversal pivot zone, reversal pivot zone, reversal pivot zone. Luftlettulum. Pretty neat stuff, right? And then you get up to these 21s, and it was like Asia Open. Short-term short with the long-term long from earlier. Just kind of like it. I guess what I'm saying is I've been here very, 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 very long time. So many millions of hours and millions of years. And it's just amazing how you can look at your watch and say, oh, gotta go. Time to hedge my yens, right? And you sit there and you're like, oh, look, you're at the 21. Drop down to a 5-minute. Hey, probably should fall here, you'd think. And all of a sudden, red candle, red candle, red candle. You're like, huh, thank you, Tokyo. That's the interesting part, huh? That it's predictable and teachable and all that. So anyways, we do these strategy sessions right before the New York Open at London lunch. Welcome to swing on by, and we can align our satellites, make sure that our technicals and fundamentals are put together. And feel free to ask questions. You are my boss, and I'm just a humble currency trader. If you like what we're doing every single day, you should be posting your trade plans at Forex.Today. And also, you should open up a trading account at TradersWay.com. FX Ambassador says, I and the market have been very good. Well, I tend to look better when the market's good. So, okay, what do you want to do with Piggy, Piggy, Piggy? Piggy, 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 can't you see? Oh, snap. Huh? Look at that. Look at London Open. Holy crimole. Now, how do you trade something like that? Impossible? Implausible? If you got a pound, I'll trade it. Ba-la-la-la-la-la. Oops, that's not what I wanted. Let's try it again. Come on, drawing tool. La-la-la-la-la-la-la. La-la-la-la-la. Kind of interesting, huh? Breakout. Retracement. Extension. Yeah! Loufle. Now that is a violent return, huh? Okay, New York ends, trading stops, Asia fades, fails to break out off the 21, lower low, lower high, lower low. Okay. Isn't that cool? This being a key. And then, of course, that develops the lower low, and then the nice pullback. Breakout, retracement, down. So yesterday we talked about Euro USD. This is Pig Dog, Pound USD. Sterling. But what did we talk about yesterday with the Euro USD? And I did a big speech yesterday about whether you should remain bearish on Euro USD even if it goes up hundreds of pips. So what did we prove yesterday? That you maintain your bias and you think ahead, right? So it's one of these things where if you were looking at the charts to tell you what to do in here, I think, you know, you could have been buying dips and you could have got this wrong, right? Well, nobody knows where it's going, Tino, so I wouldn't think that way. I'd rather you just pick a direction and tell me why than this is going here, this is going there. It's ridiculous to even say it. Going to parity. Why? Why? That's what they said 3 years ago. It didn't go to parity 3 years ago. No, Nick, but you have access to the Commitment of Traders report on the website. Okay. Yeah, we ran out of time. Yeah. So I'm assuming you've already done that work, right? Like, why wouldn't you have looked at the Commitment of Traders report? Excuse me. But one of the things I'm looking at, or trying to drill home as far as a message, is that you set a bias, and it's plausible that you just say, all I want to do for the next 6 months is buy dollar. for example. You could just, that's that. Why? Because there's a 42% chance the Fed's going to raise interest rates in the next 3 months. And if they do, the dollar gains value and this pair falls, for example. Maybe that's all you've done. That's your only work. Okay? Then what you're doing is you're sitting around at market opens, like in here, in this 6-hour period, and you're asking yourself, do I buy dollar or do I not buy dollar? Now you might also look at euro and you might also look at other things, but you're asking yourself one question, not 15 different questions, right? What about this? What about that? What does this mean? What does that mean? Look at that color. Look at that color. Look at that candle. Oh, look at the. Oh, is that a doji? Is that a doji? Right? So funny what people are taught to look for. Well, what's your bias? Yeah, and then check your blood pressure, right? Think about it. If you can't tell me what you're going to do tomorrow or the next day, then what are you? Right? An amateur, I suppose. So are you buying dollars or not? What are you doing? So, okay, so get it. Okay, we get that part. Great. So if you already know today or tomorrow and the next day and the next day that you're looking to buy dollars, for example, then there's probably like 9 different reasons to have bought dollars here at the London Open. No matter what kind of strategy you use, right? I mean, at some point, there's so much going on here in the course of 3 hours that if you're cognizant, right? If you're looking at your chart and you have a brain and a bias, then there's no problem, right? To build a portfolio and collect a lot of pips, yeah, maybe. But the thing is, you need to do what you need to do to develop a bias, to have an opinion and be able to back it up. So one of the things I asked for like 6 months ago, I said create some PowerPoint slides and tell them, and have a slide, for example, that says USD on it, and you tell me, are you a bull or a bear on the dollar? Okay, so my firm, Sound Effects Capital Management, intends to buy US dollar between now and the end of the year. Because, okay, so bullish. Okay, because of A, B, and C. Okay, and it's a nice little bullet point presentation. And you do that for maybe 3 currency pairs or 3 currencies. Okay, you're bullish on the US dollar, you're bearish on the yen, you're bearish on the CAD, you're bullish on the Kiwi. I don't know. And some bullet points, and tell me what you're going to do for the next 6 months. How hard is that? But I did ask for this maybe 3, 4, 5 months ago for some, to volunteer. If you want to do something that intelligent, you should do it. Because it's simply like that's what your client would want you to do, right? Yeah, Dino says, oh, well, it's not hard, it's just research. Right. Well, it's what your client would want. So anyways, you should be able to intelligently, if somebody says, okay, so, excuse me, man. They say, all right, hey, I heard about this Brexit thing. And you say, yeah, that's a big deal. So let's talk about the British pound, pound sterling. I believe over the next 6 months that we should the British pound, so buy or sell is what I was getting to, right? Over the next 6 months, I think we should the British pound, and let me tell you why. A, B, C. And they'll say, oh, well, that's really informative. You're like, yeah, I'm an expert. I'm worthy of your investment. I'm a money-making machine, and I hate risk. I hate risk. I hate it. But I love money. Right? So, like, put the PowerPoint together, right? So anyways, so what I'm trying to tell you is your life and your trading is so much easier if you look at this and you're like, oh my God, I've been waiting to sell this. Look at that breakout. And that's it. And I know your way is more complicated than my way. Okay? Now, if you're a bull on this pair, which means you want to buy pound, or if you want to sell dollar, well, shouldn't you be doing something right about now? Come on, drawing tool. Stupid son of a... All right. Shouldn't you be doing something now? Maybe not buying it, because I don't see a trigger here. Not on this time frame. If you bought here, you're a gambler, a degenerate gambler. That's not you, Brooke, is it? Why are you a degenerate gambler if you bought based on this information? James, by COT, you mean change of trend? Yeah. Brooke says, I bought it of a retest of the flag. What is that? What the hell are you talking about? Anyways. All right. I hope you posted it on the website. Oh, I didn't have time. I was doing it on the fly. No, all right. So here, if you're a bull, remember you have to already be a bull. Now think about it. You have to have a PowerPoint, 2 PowerPoint slides. One giving me 3 reasons why you want to buy the British pound, and the other one, a slide that has 3 reasons why you want to sell the US dollar. For example, there's no way in hell the Fed's going to raise interest rates at all this year. That could be your opinion. And I'm okay with that because close to 50%, I think it was 45%, I think it was. 45% of the market believe that is true. 45% of the market believes that's true. That could be you. Okay, good. Just prove it. Put it on a PowerPoint and then trade your analysis. You see what I mean? Like, what's the big deal? Oh, Wayne, that gets in my way. All right, but anyways, are you at support, yes or no? Yes, great. Okay. If you want to front run the inevitable 5-8 cross here, okay, you would say, okay, right? You'd look at this and say, okay, at some point we're going to come up here, we're going to come down here, we're going to move like this, the 5-8 is going to cross, okay? It's going to come up and hit this 21, it's going to come back down, and then it's going to slingshot up. And this is going to go up, 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 up. Okay? That's your plan, Stan. Got it? Next, drop to the cinco. Okay? And that's the kind of stuff you want. Up, up, up. Okay? Tino, I don't believe that's true. I got a challenge from Tino. Aha! Fed funds futures. Fed funds watch, I think it's called, right? If you got a problem, I'll solve it. CME group. If you got a problem, I'll solve it. Check out my hook. Okay. What are interest rates now in the United States? Technically, 25 to 50. So 85% chance they do nothing. Uh-oh. Was that Tino? Okay, let's go to December 14th. Okay. This is what I said. What did I say? 43%? Maybe it's changed since yesterday. 45% of people believe we will be in the 50 to 75 basis point range by December. 8.8% of the market believes that they'll raise interest rates in September and December. Okay, so what did I say? I said 47 and 43. So I think it's changed since yesterday. Oh, I guess we could look here. Previous day. Yeah, it's been moving around a little bit. Okay. So there you go, yo. Gosh, ask a great question. Who is surveyed for this? That's really good, right? This is not a survey. This is banks lending to banks, 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 lending to banks. This is their like cash market where they lend each other short-term loans, in particular to meet their Fed funds requirements. Okay, banks typically have lots of cash flow problems. Think of it this way. You deposit $1 million in your bank, savings deposit. Great. What does your bank do with it? 10% gets parked at the central bank, 90% gets loaned out. Or at least as much of that 90% as possible. They loan it out for mortgages of 30 years. So now they have a portfolio of $900,000 in mortgages, $100,000 in cash parked at the Fed, in case you want to swing on by and borrow and take some of your money out, right? And really, a bank doesn't want to get out of a 30-year mortgage when they're borrowing money from you for less than 1%, and they're loaning it out at 4.5% to 5% to somebody else. So they pay you 0.5%, and then they charge 4% on a mortgage, and they sit there and do nothing now. Think of it. Absolutely nothing. For 30 years, earning 3.5% year after year after year after year after year. You gave them the money, they gave it to somebody else, they collect 3.5% per year, doing absolutely nothing. They never lift a finger, They don't have to go out for coffee. They don't even need to get out of bed. Okay? No, if you don't have to get out of bed, you don't need coffee. Yeah, some things you have to make coffee and then go to work. Yeah. So anyways, okay. So now you come in to your bank. Remember, you deposited $1 million, right? How much cash does the bank actually have now? $100,000. So all of a sudden, a check comes in. Uh-oh! You bought a Ferrari for $200,000. Wrote a check. Uh-oh! Now what? You have $1 million at the bank, right? Wink, wink, nudge, nudge, says the banker. What's the problem? The bank's balance sheet says there's $1 million. Unfortunately, 900,000 in loans, 100,000 in required reserves. There's not enough cash, guys. What are they going to do? Sell one of the mortgages? You don't want to do that because that's guaranteed money. So now what do you do? As a banker now, you show up to the Fed funds market. Hey, boys. Hi, this is me. I'm a banker. Right? Got your little top hat on, your evil little grin, and your giant mustache, and your smile, and your big cigar. And you're like, ah ha ha ha, I'm filthy, stinking rich, and everybody else sucks because I'm a banker. I'm a rich banker. Right? I'm a rich banker, and everybody else sucks. But I'm short on cash. Okay, so he's missing 100,000 in cash, right? He has to cover the loan by the end of the day. So the banker goes to the Fed funds futures market, and we've run into another problem now. He says, hey, excuse me, the Fed funds rate is 0.5%. I want to borrow 100,000 in cash and since interest rates are 0.5% at the Fed funds rate, and this right, I need to borrow 100,000. What's the problem? That's what the interbank's about. What's the problem? So JP Morgan comes around, he's like, yeah, we'll lend you. We got the money. And Bank of America comes along, and they say, yeah, we also have the money. So you're going to negotiate. They're not going to want to give it to you for 0.5%. Why? Don't say risk, it's a short-term loan. Don't say liquidity. Why? It's cash. It's a Fed funds futures market. Cash parked at the Fed, moving across the aisle at the Fed to someone else's balance sheet. So at the Fed, it just goes from excess reserves at JP Morgan to required reserves for your bank. It never actually leaves the Fed. So there's no risk. That's a beautiful thing about banking. something happens, but nothing actually happens. What's the big question mark, guys? Come on, think, 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 think. What's the topic? Fed Watch tool. Who's surveyed for these probabilities? It's not a survey. Interbank lending rate, well, that's what this is. That's 0.5% is the Fed funds rate. The rate for short-term cash loans from one bank to another bank to cover required reserves. Sharing excess reserves to cover someone else's required reserves. Credit risk? No, there's no credit risk. They're regulated bank. These are short-term loans. These are cash loans, so there's no liquidity risk. There's no credit risk. There's a thank you cash. Future rate expectations. Why would they lend it to you at 5% when 1 week from now, rates may go up to 7.5%? Interest rates may go up by 50% in 1 week. So they're like, hey, dude, why don't you come back in a week and we'll consider it at 0.75. In fact, if the Fed doesn't raise interest rates, well, we'll lend it to you at the 0.5. But we don't want to lend it to you until we find out what the Fed does. You're cool with that, right? And you're like, oh man, all right, it's only a week, right? What happens? What's the problem? You owe this depositor cash now, on demand. Now, not in a week, not at the end of the day, now. Give me my money. I guess they have till the end of the day before the check clears, right? Give me my money. He wrote a check. Ferrari dealership is sitting there waiting for their cash. Check's got to clear, right? So how do you handle this problem? JP Morgan and Bank of America, they're like, yeah, we want to lend you the money, but we face the risk of, of interest rates changing in 1 week. So 5% doesn't feel right to us. Unless, of course, we find out the Fed doesn't raise interest rates, and then 5 seems fine. You negotiate. So should you pay 0.75% today? Because the Fed might raise interest rates next week? No, because you're going to say, no, they're not going to raise interest rates next week. And then Bank of America or JP Morgan or whoever else, you could negotiate with multiple banks here. And they're like, well, we kind of agree with you, but they might. They could. There is a small probability. We don't want to take that risk. We don't have to give you our money. Our money's parked at the Fed. It's safe. So if you want our money, you got to cover that risk. So pay excuse me, it's always worse than more. Pay something. So now you negotiate, and you pay a little more than 5%, but less than 0.75%, because you negotiate. Right? Isn't that how the real world works? So guess what? This tool calculates probabilities, not based on a survey of bankers, because bankers don't tell the truth. They don't even know what the truth is, and if they knew what it was, they would certainly not give it to you. So what they're doing is they're negotiating interest rates like an auction. Okay? And you can look at the price that's being paid or charged, either way, however you want to look at it, depending if you're a borrower or a lender, on these different meetings. These are Fed meetings when they raise, right? And so these are when these Fed fund futures expire. Okay? And you can look at the different prices and figure out Well, prices haven't moved much in September, so most people think interest rates will be kept the same in September. But in December, half the market feels like the interest rates will go up. So you'll see a difference in price based on negotiations. See, if you lend the government money, or in this case, if you borrow $100, they're only going to give you $99.49, but you're going to pay them $100 back. Okay? Here, if you borrow $100, they're only going to give you $99.59. It's sort of like if you want to think of it as a mortgage, right? You want to borrow $1 million, but they'll only give you $800,000. You got to come up with the other 20% yourself. You see what I mean? So it's kind of like that, where you pay them back $100, but they only give you $99.59. There's so short-term loans, there's not even yield. There's no percentage. They just, okay? Another way of looking at it is you can lend the government $99.59, right? And on September 21st, they'll give you $100. Sounds good, right? How about July? All right, things change, right? July 2017, the market still thinks we're going to be at 75 basis points. Look at that, 30% believe we'll still be right where we are. Wow. Okay, interesting, huh? So this is the ultimate, most beautiful survey in the world, one where nobody is actually asked anything. It's literally the sum of negotiations based on people's true opinion of, hey, I'll lend you the money, but I think there's a small chance that that interest rates might go higher, and you have to compensate me for that. And the farther out you go, the more likely interest rates are going to go up, and the more likely you're going to have to pay me a little more. Or I lend you even less than 100, right? $99.20 instead of $99.60, because I think between now and then interest rates will go up, so you're going to have to pay me for that. You see what I mean? Isn't it beautiful? It's a beautiful thing because it's truth, not opinion. Okay? So I love it. It's real. It's real. Think of it, trillions of dollars being negotiated. No joke, guys. Trillions of dollars being negotiated. And this is what we've learned from, all right? Their opinions, their actual real risks and concerns over trillions of dollars in cash. Comes out to, that's what it tells us they're negotiating today. And remember, yesterday, prices were different because yesterday opinions were different. Isn't that neat? So every day it comes out. That's why it says, yesterday versus today. Well, yesterday people had different fears. Today they have unique fears relative to yesterday's fears, and therefore new prices have to be negotiated in these cash contracts. It's really neat. Okay? Now, what does that mean to a foreign exchange trader? Well, if interest rates are going up, if the cash market is right, if those bankers now, remember, these are not, right, it's like commitment to traders report. We're not talking about hedgers. We're not talking about dumb money, retail loser traders like us, right? We're not talking about sentiment surveys that some idiot newspaper has written. It's literally sophisticated institutional, in this case, banks, institutional lenders lending money to other institutional lenders, right, in a cash market, and literally what they negotiate. It's really cool. So if interest rates are going up based on what the smart money is doing, not even thinking, literally doing, then that can affect, opinions globally, let's say, of whether the dollar is going to strengthen. Because that's the assumption, right? If interest rates go up sometime in the next 6 months, the dollar should strengthen, you would think. And you would say, well, based on that analysis, right? Now think of it. Now you're talking with your client again. Well, based on the Fed funds futures market and the activity of sophisticated bankers, I believe over the next 6 months, there's almost a 50% chance interest rates will go up in the United States. And if that's the case, the US dollar should be strong. Therefore, that is one reason why I am going to buy dollars. Reason number two I want to buy dollars is, and you go down to that bullet point. It's only activity between banks. Oh, cash is interesting. All right, so you're doing a chicken and egg thing. Isn't it inflation? All right, well, what does the Fed do to combat inflation? Tino, I'll tell you, but it requires at least $1 million. Okay. Yeah, cash says, yeah, increase rates to tighten the market. So there you go. So how do we know if that's happening? How do we know if there's inflation in the market? Well, let's say you had no inflation. Let's say it was all private. Only banks and hedge funds and the government had inflation indicators. Well, if you had the Fed Watch tool, you could say, well, I don't know what inflation is. I don't have any way to measure that. But the banking system believes there is inflation and that the central bank is likely to act by tightening interest rates to combat the inflation, right? And I can see that in the difference in pricing that's occurring in the Fed funds futures market. So the people that do have inflation indicators believe interest rates are on their way over the next 3, 6, 9 months. So over that course of period, I believe the dollar should strengthen. Boom. You don't even have to have an inflation indicator. Think of it this way. How many quants do you think work at all these banks? If you think of every Fed-regulated bank in the United States, thousands of banks, how many quants do they have? You have thousands and thousands and thousands and thousands of highly educated people. They're quantitative analysts and economists with PhDs. And they're working day and night and they're debating, heated debates, whether the Fed's going to raise interest rates or not. And we can look at that and say, thank you, we appreciate that information. You see what I mean? So, based on this right now, you should only be neutral in the US dollar. Why? Based on my analysis of the Fed funds futures market, right? You believe what? Between now and the end of the year, there's only a 50-50 chance. And right now, there's almost no chance the Fed's going to raise interest rates. So, you can say, well, between now and Thanksgiving, I'm neutral to bearish on the US dollar. And then from Thanksgiving, or let's say from November, let's just say November, Then from November to the end of December, I'm going to be neutral to bullish. Tino says they will raise rates eventually. All right, well, do you still want to have money in your trading account between now and that day? Yeah, all right there. Brooke knows how to do fundamental analysis now. Good job. You got it. You're done. You're an expert. Thank you, everybody. Have a wonderful life. No, it's one thing to watch, my friend. But you can stack those types of things together and actually have an intelligent bias. Right? You're Aussie. What's Thanksgiving? Well, it's a holiday in the third week of November. It's the day a bunch of religious crazy psychopaths that were kicked out of Europe came to America and shot a bunch of Indians. They're like, and we're not even Indians. Close enough. Shoot them anyways. So yeah, it's a great victory for somebody. So anyways, we tend to eat turkeys that day. Yeah, hopefully I don't get into trouble. All right, so anyways, so that's that. So now you got to really pick your winners and losers then. So if you are neutral on the US dollar, what do? Well, why don't you find something you're not neutral on? If you got a problem, I'll solve it. Yeah. Sure, Austin. Sounds like a nice news story, huh? All right. Tell me how many people that you know that want rubles. You're like, man, I gotta get rid of all this US dollars, and I gotta, as fast as possible, I gotta convert it to rubles. Right? You'd have to be mentally deranged. So once again, turn your TV off. So you notice, like, when I have TV running up above me, right? So I'll turn it on now. Okay, so when I have TV running above me, there's no sound. I used to have, was it 17? I thought I was going to say 27. It might have been 27. But I certainly used to have 17 subscriptions. When I started trading, when I said, okay, I'm going to become a Forex trader, when I was a venture capitalist, I already had a subscription to Import-Export magazine and Supply Chain Management magazine. These were things that were involved in investing into patents and products and stuff. So I already was kind of reading global macroeconomic kind of related stuff, loosely related stuff. So I had a couple of those magazines. So then I immediately subscribed to Wall Street Journal, Investor Business Daily, and the Financial Times out of the UK, and had that delivered. And then I made a quick trip out to Japan. I did some speaking there and met. In fact, I hired 2 employees out of Credit Suisse. Yeah, true story. I had 2 employees from Credit Suisse, Japan. So anyway, so I was out there, took their families out for dinner and stuff. And at the hotel, they had an English newspaper called the Nikkei Weekly. The Nikkei Weekly, once a week. It was an English written finance related newspaper printed in Japan. So I had that flown out to my house every week. What an idiot. But I'm like, oh my God, this is great. Like, they're talking about Japanese news, but they're also talking about U.S. news, like the U.S. job reports, right? NFP. But they're talking about it from a Japanese point of view. And I'm like, this is awesome. Plus, now I know, like, what's on the mind. Like, they're writing stuff about the BOJ that you just don't hear about in the United States. So I'm like, oh, yeah. So I loved it, right? So that was a little expensive, but, you know, literally I had it flown out. And then very quickly, by the end of my first year, I had 27 different newspaper subscriptions or various other subscriptions. I remember one of them, I subscribed to a lot of industry magazines because I started reading the Wall Street Journal and stuff, and you know, I wasn't completely happy with their reporting. So anyway, I decided to stretch and find other things, and I started doing things like finding industry magazines that were only available to people in those industries. So I remember, I was subscribed to magazines for oil men, right? And I kind of fudged my application a little bit, and turns out I was a CEO of an oil company. Right? I might have fudged that a little bit, considering I didn't have an oil company. Right? You know, a digital copy back then? No, there was no digital copies of anything. So anyways, all of a sudden I'm getting like Wildcat magazine. Right? I told my wife, I subscribed to Wildcat magazine. When it comes to the door, let me know. And she started crying. This was before we were married, I think. I'm like, no, it's not what you think. No. It's about drilling oil. It's about rigs, not chicks. So anyways, that's how I did it. And after a while, I stopped subscribing to the financial magazines or, you know, newspapers and stuff. And I just started watching more TV and reading industry expert stuff. But you know, when you subscribe though to like Wildcatter magazine or whatever it was like $500 a year because you're joining to get it. You have to join like the industry, right? You have to be part of this. So you know, in flying newspapers out from Japan, you know, is again, you know, I'm spending $1,000 a year, right, for 15 newspapers. So it got pretty expensive, and then I started learning, and all of a sudden I needed less and less of that. But I learned a lot about oil, and I learned a lot about gold, and I learned a lot about import-export and things that were related, and a lot of things were not related, right? And now, you know, fast forward a million years, I don't really rely on any of it anymore. Where I relate to my own analysis, and there are a lot of tools I like to use. One is the Fed Funds Futures Rate. That's fine, but there's many. There's just lots of stuff out there. But it's usually not media. Okay? So like, how about the IMF report? Love it. How about every central banking report released? Love it. Commitment to traders report, love it. Fed funds futures, love it. You know, all that kind of stuff, because it's real and it's money, and it's smart investments telling me the likelihood of the near future, and therefore I can line up my analysis technically so that it concurs, it confirms, it's congruent to my fundamental analysis. Okay? So you could do things like say, you know, don't be shocked if dollar's weak. And you see an upward move and you're like, yeah, not shocking. How about S&P 500? Right? What's it telling you? Down, 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 up, and you know, down, 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 up. Mm, oil. Hey, remember oil? Don't you remember just recently the news people told you you should buy oil? Do you remember? What did I tell you when this happened and we were up here? And the media was going crazy. Oh, oil jumped 3% in a day or 5% in a day. It's so amazing. Everything's changed. Huge drawdown in inventories. It's remarkable. Yeah, it's bullshit. Sell it. Get rid of it. Well, more specifically, the drawdown had to do with the hurricane. Remember? The drawdown on oil inventories came this way, and everyone's like, oh my God, it's something meaningful about global macroeconomics. Right? This is where I told the story of Brian's slipper, Brian's sandal, as he's running away from the crowd that thinks he's the Messiah. It's a sign. He's left us this sandal, and it's a symbol of something important, right? Do you remember that story? And really, he's just trying to get away from all these crazy people, right? So here it is, like, it's a sign. It's a sign. No. It was a hurricane. The ships couldn't get to the shore to unload their oil, yet we were still using oil. So inventories are down. Well, what's going to happen when they put the oil inside the can? Inventories go back up and price comes back down again. It's like, don't you remember I said this is like stupid, easy, ridiculous, stupid, easy money? Right? Don't you remember talking about that? Free money, ridiculously stupid, easy free money. Because there's no way that this is true. Dumb money, smart money, right? No, none of this rings a bell from just 2 days ago. I don't know, maybe it was yesterday. I can't remember these things. Oh, wait, this was Thursday. Okay, that's right. This was Thursday, so we talked about it. Oh, I'm sorry. It might have been premium members. It might have been premium members at FX Street where we discussed this. On my Friday webinar, I must have did it then, where I said this is just ridiculous, stupid, easy money. That dumb money bought it because they're dumb. Smart money sold it because they're smart. This is a mirage or fool's gold, and this is the real deal. This is the prime rib of Forex. How many people have known me for more than 10 years, like 12 years ago. Anybody been around that long? Okay, let me show you this. I have a hidden copy of my website from 12 or 13 years ago, and there's a testimonial. I think it's still here. Do you want to hear this one? These are all real testimonials, by the way. What was the guy's name? Because I have like 1, 2, 3, 4, 5, 6, 7, 8. I have like 25 different testimonials. Oh, here it is. I hope it's still here. You got to hear this. You got to hear this. Real deal. This guy's real. It's like, I couldn't believe it. Here we go.
Hello, this is Fred T. from Texas. I'm here to offer Wayne McDonell a testimonial for his FX boot camp. I'm a graduate of Texas A&M University with 2 postgraduate degrees. I spent the last 35 years teaching high school and college students. That makes me qualified to determine what's required to transfer information from one mind to another. Well, Wayne McDonell has been blessed with the skills that make him a good teacher, and he's armed himself with the knowledge that you want to learn to be a good Forex trader. If you like baloney, there's plenty of it out there. But if you want the prime rib of Forex trading, sign up with Wayne McDonell and his FX boot camp. He's the real deal.
I love it. I love it. Amazing. Like 13 years ago. You couldn't make that up. Yeah, just absolutely amazing, isn't it? Like that guy is so much Texas, right? I mean, just amazing. What an amazing. The prime rib of Forex. Hang on. I only got 5% of that cough left, and yet it's still 100%, right? Anyways, so there you go. There's the real deal, right? So there's a lot of different things going on here. There was some. Hang on. It's amazing. Just bugs me in the morning now. All right. Yesterday, like I said, London close. We had some good moves in the yens, and I think maybe you want to pay attention to that again today. Yesterday, I bought CAD yen, Kiwi yen, Aussie yen. I think maybe that's it. So and then Asia opened and hedged it, right? So I would really implore you to pay attention with that as well. Right now, I'm looking at commodities coming down. Canadian dollar in particular is getting crushed at the moment. Okay, so again, one of the things we talked about is pick your bias. I don't care if you're up or down on the US dollar, you just need to make a decision. And with Canadian dollar, for example, once again, make a decision. Are you a bull or a bear? And when you line things up with the perfect storm, you can get like your long US dollar, short Canadian dollar for things like oil. Just that analysis of oil, right? Just the basic analysis. If you think about it, if you have an opinion, an opinion is a very specific thing. Like if you're sitting down with a client, you have to say something like, there's no way in hell oil is going to go up above 50. And let me tell you 3 reasons why. Right? Do you understand? Like, you have to have conviction. And then you say, because there's no way in hell oil's going up, let me tell you how to make money by playing the Canadian dollar. If oil's not going to go up, are you bullish or bearish on the Canadian dollar? The Canadian dollar specifically would be bearish, right? So what's the problem? The problem is you haven't done that. Okay? Why don't you actually make some PowerPoint slides and post them on, as a trade plan on Forex.Today? Why not? Okay? And if you happen to be bullish on the US dollar, now you got a perfect storm, right? What you need to be looking here is probably monthly pivots. Okay? So on and so forth. Now how about this? No. I need to go farther out. All right. So how about this? You know to be ready to sell this currency pair here. You know to sell this currency pair here, right? How many people can say that that's an absolute fact? And you know to sell it here. Right? Absolute fact. You know it's going to happen before it happens. 2.1 billion. 2.2 billion. And this month, 2.3 billion. The most amazing thing is the Mexican peso right now, the one you just bought just last week, is one of the weakest currencies on the entire planet. Yet you made money buying it. Why? Because Mexican peso is awesome? No. Because you knew before it happened, $2.3 billion about. I said 2.1, but it turned out to be 2.3. So I'm sorry, I was wrong. $2.3 billion going into the Mexican peso. Isn't it nice to know it before it happened? Oh my God. Isn't that just beautiful? And then what happens when the 2.3 billion's been absorbed? It's gone. It's just gone. Now a dummy would keep, selling this pair, right? Why? This is, and I want to end on this. Fundamentals told me to sell this pair here. Right? Now, technical analysis, let me change colors. Let's go to red. Would have told you to buy here. Right? Because you would have been looking for the role reversal off of this. Right? So technical said, buy here, Wayne, buy here, Mr. Technical Analyst. Now this drop is very significant, isn't it? There's no way you would have held onto that if you were launching off of this, right? A technician would have lost money. And in fact, what would they have done after such a huge drop? They would have sold here. Based on technical analysis, right? Don't you think that's reasonably true? You can see we even stalled out there. That just basic technical analysis would have said, all right, it's going to come up, it's going to hit that roll reversal, and this is going to go down, right? Lost again. Fundamental analysis said, get ready, because this ain't funny. My name's WD, I'm about to make money, right? So it drops for a few days and then completely reverses. Why? Because the fundamentals hadn't changed. It was just a $2.3 billion trade, right? That's all. And once we got rid of that, absorbed all of that, then we just go right on to Mexican peso weakness based on global macroeconomics. What's the problem? Yeah, well, we talked about it recently. I don't know if I talked about it on Friday at FX Street or not. It's macroeconomics. I believe we talked about it, though. They're an exporting nation. Global macroeconomics are poor. In particular, the ECB refuses to do anything. You see what I mean? So if they're not going to save themselves, if they're choking on blood and are going to continue to choke on blood, how is that going to be positive for the global economy? Well, it couldn't possibly. In fact, it's a risk, right? So if the ECB is not going to do anything to help the global economy, and they end up being a risk to the global economy, well, how do you feel about a nation that exports? Is that going to be good for them or bad for them? Bad. That's it. So that is actually the ECB. Isn't that just amazing? Boom! Your head just exploded. Boom! Make room for knowledge. That's the European Central Bank you're looking at when you see the Mexican peso. Amazing, isn't it? Also, what is one of the major exports of Mexico, even though they're unbelievably pathetic at producing this export? Their costs are high, their production's low, it's likely to be corrupt up the yin-yang and wazoo combined, and that's oil. Thank you, Adam. They have lots and lots of oil, and they're horrible, horrible, horrible at producing it. It's the only thing that actually has kept that country alive probably the last 30 or 40 years. It's not like all those gangs are paying taxes, right? What else is good going on in Mexico? I'm sorry if there are Mexicans in the room, but it's true, at least from a foreigner point of view. What good is going on in Mexico? Am I going to take my children? You know, we'll get in a car and let's drive across Mexico? Oy vey. No, that ain't going to happen, right? So anyways, the one thing they have is oil. And they've nationalized it like socialist pig dogs, like Venezuela would, and like Venezuela did, are absolutely ridiculously horrible at producing oil. But they nationalized it, right? So that's all going to change pretty soon because they're so desperate for the money. But nonetheless, it is something that keeps the entire country afloat. It's just enough oil production to keep them alive, right? And guess what? Oil isn't at $100 a barrel. It's at $45 a barrel. And will probably be at $45 a barrel for a year or two or three, roughly. You see what I mean? So how is that possibly good for Mexico? So just macroeconomics, guys. So Pemex is the national oil company of Mexico. Foreigners are not allowed to drill oil in Mexico. Isn't that amazing? Well, all that's going to change in a heartbeat. So you take all this information, guys, use a little bit of technical analysis, and you'll be a success. But you need to specialize, you need to focus, you need to have intent, you need to have a plan, you need to have an opinion, you need to stand for something, or you fall for anything like, oh my God, Mexican peso, super strong, I gotta buy it 3 days late. Oh my God, Mexican peso's weak. Oh my God, I gotta sell it. Oh my God, every time I buy or sell, I lose money. Uh-huh. It must be my broker hunting my stop. No, dude. Well, not at TradersWay anyways. If you have a lame broker, that's your problem. Maybe you should switch TradersWay, yo. Yeah, Luis is, wow, or Luis, 60% of GDP. Hey, are there any Mexicans here? Yeah? No offense, bro. So, I mean, it's brutally honest, and I exaggerate for effect to get across a point. But I get, and in particular when I'm like that, you know, I wish for a different Mexico, I guess, right? Like, I would love Mexico to be in a better place. So that's why I got to be blunt. Mexican American? Okay. So I have no problems with Mexicans. I have problems with corruption. I have problems with socialism. I have problems with inefficiency. I have problems with societies that prevent entrepreneurialism. And I don't want I don't want to be kidnapped and melted in acid. That kind of stuff. Right? And right, and nor do you, right? So, but that's my point, right? But I wish Mexico was perdísimo, as it should be. So anyways, no offense, brothers. Yeah, no, it totally isn't, and I don't like it anywhere, you know. It's just like in this day and world, you know, at all of like Central America, what's going on there? You know what I mean? Like, wow, we got to fix these problems. Did you know 100 years ago, Argentina was the 5th richest country in the world? 5th! Argentina was filthy, ridiculously wealthy and sophisticated. And then socialism kicked in. And then the Russian pig dogs came in. Tried to turn socialism into communism. You're like, oh my God. But before then, the Americans were all over South America and Central America, raping and pillaging. And before them, there was the Spaniards, and like, oh my God. It hasn't been a fair playing field for a long time. You know, so I hope the best for, you know, Latin America. Let's fix these things. The world is too modern now, right? Get rid of socialism, get rid of communism. Let's bring in transparency and democracy, entrepreneurialism, and capitalism. You know what I mean? Like, it's been proven. And you do it through Forex. I mean, but that's what I'm saying. You have to be an entrepreneur, though, to sit down and say, I'm going to trade the foreign exchange market. And even though I live in El Salvador, I'm going to fly in newspapers from Japan. Because what Kuroda says And what Abe says is important to me. And I'm going to make money, and I'm going to take care of my family. I'm going to, live in a safe neighborhood. Nobody's going to kick my door down in the middle of the night. Yeah, right? I don't have to be afraid of the police. I don't have to be afraid of the government. I can just live a comfortable life of wealth and happiness and health on top of that. That's what I want for everybody. And if anything gets in our way, we're going to crush it. So anyways, I love you guys. Peace on earth. May the pips be with you. May our profits be above average. Let's change the world, huh? Nothing more fair than a zero-sum game like Forex, right? You win, it's because someone else made a mistake. You were just smarter, better, more intelligent, more patience, more discipline, more prepared, better plan. And some idiot wants to jump in and throw down some trades, and they're gonna transfer their wealth to you. I mean, it's beautiful. Nobody's in the way. You want a hard job? Be a farmer. You want a hard job? Open up a restaurant. This ain't hard. Look at this. I'm sitting in a $1,500 leather chair. Look at that. Beautiful, right? Oh, this is a hard job. I have to sit here 10, 12 hours a day, and I'm sitting in my shorts. And maybe I'll go outside later and read. And look, I got empty wine glasses on my desk. Who was trading the Asian session last night, drinking red wine? Yeah, real tough job. Right? Look, coffee cup, rock star, coffee cup. All right. Apparently, there's a lot of hours involved. Oh, I do read a newspaper, by the way. Look at this. I got to move my Rolex out of the way. Hang on. I do read a newspaper once a week, or I try. Do you know what I actually read? Can you see that? No, not enough light. I read Barron's. I don't really read the opinions, though. What I like about it is they just talk about different fund managers. They interview fund managers. I just like listening. I'm always amazed. Two guys in Novato, California manage $800 million. I'm like, what? I've been doing it for 20 years. I'm like, 20 years, 800 million, and it's two guys in Novato, California? Damn, that's interesting. What do they do? Right? So anyways, once again, I'll say it again because it doesn't bother me. We should say it probably 3 times a day, but peace on earth, right?
Hello, my name is Wayne McDonell.
Holy. Wow, that was loud. So peace on earth, may the pips be with you, may our profits be above average, and I will be here tomorrow as well. You guys want to hear the testimonial one more time? I gotta listen to it again. It's so amazing. All right, Fred from Texas.
Hello, this is Fred P. from Texas. I'm here to offer Wayne McDonell a testimonial for his FX boot camp. I'm a graduate of Texas A&M University with 2 postgraduate degrees. I spent the last 35 years teaching high school and college students. That makes me qualified to determine what's required to transfer information from one mind to another. Well, Wayne McDonell has been blessed with the skills that make him a good teacher, and he's armed himself with the knowledge that you want to learn to be a good Forex trader. If you like baloney, there's plenty of it out there. But if you want the prime rib of Forex trading, sign up with Wayne McDonell and his FX boot camp. He's the real deal.
So in this case, open up a trading account at TradersWay. We'll be best friends. Will you do that? They make it possible for us to do these webinars every day. Open up an account. And some of you guys have told me that you're with a different broker and they screw around with you. I just can't imagine why you're still there. Move over to TradersWay. I've never, ever even heard of problems and slippage and this, that, and repricing and all that crap that bad brokers do. TradersWay will take care of you. They're good people. Join the family, huh? See you tomorrow, guys.